Nigeria market players have their eyes fixed on the increase in treasuries and bond yields following Monday's 225 billion naira T-bill auction. Meanwhile, the naira is moderating gains at the parallel market. Tunde Adama, head of trading at Citibank, joins me live in the studio for more market updates. Tunde, thank you so much. Pleasure to have you on the show today. But I'd like you to, first of all, let's talk about inflation. Has there been any market reaction? We're up again at 21.1% for the month of October.
No, I think market has sort of priced it in. I think most of the forecast had it at between 21 and 21.3. So it coming in at 21.09, slightly below. I think most people thought it would be more around that 21.2, but being so close, it's sort of seen as neutral. The fact that inflation was going to go up is something that market had priced in.
But is there a sense in the market also that things could potentially get much worse in terms of the headroom for the numbers to go higher before things begin to peak and come down?
I think initially the general feeling was that we were getting close to the top. If you look at the month-on-month numbers, right, they seem to have slowed down a bit the last 2 or so months. I think the concern why maybe people won't necessarily act on it yet is with the floodings. How does that affect the inflation numbers? When would that start to kick in?
Well, economists have just left here. I'm sure you listened to Bismarck. He said that we'll see that come through in November's numbers. Yep.
So for now, I don't think market has fully priced in the flood to it, but market has been a bit cautious. If not for the floods, you might have seen a bit more aggressive buying in the market right now. But right now, market is just taking its time to see how those numbers would feed in.
But we are seeing yields rising at the market, and I believe, especially the short-dated, 1 year, 90-day, 182-day, going upwards of 15%. I'm just wondering, to what extent can the market sustain yields at current levels?
Well, if you look at it, we still have negative real interest rates. Yesterday at the bond auction, for example, there was a lot of interest in the 15-year paper, which was over 16%. People who are managing funds on behalf of institutions and individuals need to ensure that they bring in returns as near to real interest rate as possible. So from that perspective, right, it seems like it's just getting to levels where people are being a bit more comfortable. Inflation at 21%. You're still investing at 15, 16%.
It's still a negative.
So it's a tough one until the time comes where we start to think inflation is going to average much lower. I think the rates will need to be around these levels or maybe even slightly higher to keep investor interest.
Let's talk a bit about the naira now. Yeah. What is your forecast for the short to medium term future or trading range, if you will, for the naira? I mean, having just emerged from a rather violent speculative attack in the last couple of weeks, and we're seeing it going back again towards 700-800 levels. But what is your take in terms of trading range for the naira and where we could go from here?
Well, I think in the short to medium term, the central bank, especially in the official market, which is their focus, will look to keep it as stable as possible. We've seen it gradually depreciate month on month.
Where we're now 440 something?
We're about 445 on average. We've seen it sort of gradually depreciate. I think they want a more orderly depreciation at the official market, and I think this will continue to end and probably into early next year. Central bank doesn't like to be part of any of the politics during elections, and so you don't see any big major change from the central bank during this period.
But we did see that naira, the notes,
well, yes,
that did also have some effect on the movement of the naira.
Yeah. And I think they knew that was going to happen. They would have obviously looked at the various scenarios, and I think that's why you saw a bit of coordination with the law enforcement to try and mitigate it. But obviously there were other, more important reasons for them to make that change. Trying to curb terrorism. And
of course, having more of the naira out of the system. Now, but we know that the NNPC tells us that crude production is back up at just over 1 million barrels per day. And obviously, we know that translates to better accretion to the FX reserves. Does this give the CBN more confidence and perhaps extra dollars to properly defend the naira?
I think obviously it's getting higher is important, but don't forget we're still going all the way to about 1.7, 1.8 million, which is where our OPEC quota is. The CBN would have much more information about what they're doing with regards to getting production up. If it does look like we are on track back to 1.4, 1.5, closer to OPEC quota, then
1.8,
central bank might
yeah.
feel a bit more confident. Say, look, some of what we have in reserve, because central bank has an eye on reserves. They want to keep it healthy. They want to keep it at the pace where the market have confidence in the naira. If they do think that the accretion will increase with production going up closer to OPEC quota, then you might see them spending a bit more. So yes, it's positive news, but we need to see it much higher than where it is now.
Absolutely.
Yeah.
But we're in November now. How would you describe this year for Nigerian bondholders, of the Nigerian bondholders? In one sentence, how would you describe how this year has been for them so far?
I think it started difficult. We're in a rising yield environment. So it's difficult for you to go all out to put money into fixed income. So they start in cash for a long while, but now yields are getting to levels where they are a lot more interesting, and we're seeing them putting a bit more cash to play. I mean, evidenced by the 15-year paper yesterday, where 75 billion was put on offer and demand was 260, and they ended up selling 216. So yields are getting the interesting levels now, and I expect that the big institutional investors will start to put a lot more of their cash to play.
But, okay, we have 60 seconds left. Can same be said for corporate bond markets? I know lots of corporates are wanting to come into the market, especially at a time like this. Obviously, it's difficult in terms of...
It's great for investors, but not so great for issuers.
Yeah, CPs last year were the thing, but it looks like, has that pretty much dried up?
Not totally, but a lot less. I mean, you could raise CPs last year at single digits. Now you have to raise at sovereign plus. So if you're going to raise now, you're going to be raising it 400, 500, 600 basis points higher than you did last year. Wow. But for investors, they're happy.
Well, we'll leave it there then. Thank you so much, Tunde, for talking to us. Pleasure to have you on the show today. Tunde Adama, Head of Trading at Citibank Nigeria.